Hello, everyone. Happy new month and welcome to this weekend's gold market analysis. Last week the US dollar made a slight recovery, fueled by stronger risk appetite in the market, mainly due to the easing trade tensions and a solid job report out of the United States. That shift in sentiment prompted many traders to lock in profits ahead of the weekend. As a result of this, gold recorded its second consecutive weekly decline in 2025. Now, this back to back loss was a first for the year, signaling a notable shift in market dynamics. Now, here is what really caught my attention. Even with the dollar's recovery and a strong NFP report, gold couldn't break below the $3,200 area, a zone which has a strong memory for buying power, at least for the past 2 to 3 weeks. Now, this area for me appears to be holding firm as a critical support heading into the new week. Now, while the broader bias on gold remains bullish, the anticipation around the Fed's upcoming interest rate decision, combined with the ISM Services PMI release, is making traders hesitant to jump in aggressively, especially on the sell side. Still, we can't ignore what is forming technically on the chart. If you look at the structure here, there is a descending trend line just right here, showing sellers might be gearing up, and if that support around the 3,200 level gets broken to the downside, um, we could see further decline. So the big question is, will this $3,200 level hold as a launchpad for the next bullish leg, or are we on the verge of a deeper correction? So in today's video, I will walk you through the key technical zones I am watching and highlight opportunities for both buyers and sellers this week. But before I proceed, please note that this is just my personal take based on what I see on the charts and not financial advice. So, with that said, here, let's dive right in and see what gold has in store for us this week. So, let's take a step back and look at how the year started compared to where we are now. So right here on the 4 hours time frame, you can clearly see that the market has been in a steady uptrend. This is further confirmed by the connecting the pivot lows you can see here, which gives us this clean and beautiful ascending trend line to work with. In fact, it's a powerful structure and one that's likely to play a big role in how gold behaves in the coming week. So, after capturing the uptrend scenario since the beginning of the year, I was able to mark out some levels which I'm going to be using to navigate this market next week. So, zooming into the current structure, that is, let's go into the last 2 weeks in this market, especially after price action tested that all-time record high had the $3,500 area about 2 weeks ago. And then we saw price do a retracement move. As you can see here, gold lost some momentum as profit taking activities happened, and the inability of sellers to break through that $3,200 area made me identify that area as a demand zone going forward. And when we have a demand zone, it is reasonable that we consider buying ideas around the structure and not consider selling unless that demand zone is breached and broken to the downside. To help us have a clean structure here again is this descending trend line, which the last 2 weeks, as you can see, price had consistently traded below it, as every attempt by buyers to break out of the structure was met with strong resistance from the sellers, pushing price to the downside. Now, my key level for next week is going to be around the 3,260. So if you look at the structure closely, so this is the 3,260 right here. So I would love to see price break above this 3,260 for me to start considering buying. And look at how beautifully that key level lines up with that descending trend line. So if price can break above the 3,260, it will also have broken out of that descending trend line, which will be the first time price will be breaking out of that structure in the last 2 weeks. Now, secondly, you will see that it appears that price is evolving into a reversal setup in the form of a double bottom structure where the both the key level at the 3,260 and that descending trend line may serve as the neckline of that reversal pattern. So at this point, the pattern is not yet validated. We will need price to break out of that structure before we can now confirm that buyers still have a say in this market. So that is basically what I am looking at to buy the XAUUSD. However, if it happens that the dollar continues to gain momentum and price breaks down the demand zone at the 3,200, in fact, a breakdown retest will be all I need to continue a move to the downside. And maybe price could retrace back into that ascending trend line we spotted earlier, maybe in an attempt to continue that uptrend scenario or even break it to the downside to incite a massive sell-off. So basically, this is what I am looking at on the XAUUSD next week. As you can see, our center of focus will be between the 3,260 and the $3,200 area, where depending on whatever direction the price breaks out of, will give us an idea of where we are going to. So there you have it, my in-depth look into the XAUUSD for the week ahead. And trust me, I will be with you in the comment section of this video to give you an update of what I think is going on in the market after monitoring the character of price action around this area during the early hour of the new week. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insight, weekend market prep, and updates. Thanks for watching, guys. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.